Good morning, everybody. So yesterday, the Fed, in particular the Fed head Yellen, tells us that the world matters, that we can't raise rates with the world as it is. And the result of that, of course, is that we're going to see more easing around the world, and we're not going to raise rates here. So that of course, gets the gold bugs going again. Here's GLD popping up. Realize here that this is still in this range, the larger range that we had drawn out before. Nothing's really changed there. This bar over here is still there, still hasn't got to it. Did pop up, but it's still in the range. It's in the middle of the range. So there's really nothing to do with gold here other than to hold it. See if it eventually is going to break to the top side. As this thing has gone sideways, it's slowly worked off this overbought condition. So no longer do we have this straight up move, right? But we've got some sort of an angle, 45-degree angle that you can stick with. And so my take is that at some point this is going to break out again. And so you want to be positioned for that. And we have a position now. If it gets deeper, we'll add to it. If it stays up here or starts to break out, we'll try to add to it on the breakout. But in between here and there, it's the same thing. Just stick with it. KMI. KMI tried to add to it, couldn't get into it yesterday. Thought we were going to get a deeper pullback and finally get the retest regen off this swing point high. Oil was down big. Then of course Yellen did her thing. Everything flipped around and it's just hanging there. So again, I don't see a reason to jump into this. Oil itself looks like it's still going to try to come down once this Fed dovishness fades off a little bit. And that may fade off quickly. We got more speakers today and tomorrow that are probably going to be hawkish on the Fed. But right now the Fed head says it's going to stay that way, and the market believes it, and it's risk on. And we're getting a big push in our Rio position as a result of that. For example, if I pop Rio up, yesterday we added to it down here, and today it's probably going to pop up as a result of the risk on situation. Finally, going to the S&P 500, where we've got the shorts on and are getting hammered on them. We were looking for a pullback. We had, if I go back over here and pull the weekly over, we had the 2-bar reversal that gave me the indication that we'd probably get some sort of a retrace, at least sideways, maybe a retrace this week. Instead, now that the Fed head's done her thing, this thing's trying to break higher. I'm going to have to take part of this position off, if not all of it. Today, I will make a move to lighten the load on this losing position as a result of it. Can't stay in a position if the market's telling you something different. And right now, it's telling us it just doesn't want to come in, and we have to respect it. So that's where we're at on these three. As you know, keep looking at other things, keep trying to get into positions elsewhere. So far, I haven't been that successful as well because we can't get a pullback. And, unless you want to buy the momentum and try to run with it, which you can do if you're doing the day trades and you're very attuned to, fast moves, that's okay. In a swing trading perspective, think about it from this perspective. If I wanted to put a position on today, right, I have to consider, it's a momentum trade is what it is. I have to consider where is my target, and I have to consider how large a position do I have to put on to be able to make it worthwhile. And so I have to put a stop. If I put a position on today, and one could do it, you could use this quad witching bar, and so you could use the bottom of this bar, this takeoff today, right, and your target maybe at say 2080 up here. Put your stops right underneath here. Unfortunately, you've got to buy it, somewhere in here probably this morning, and you can see your reward risk just doesn't make sense. And so it's hard to put the trades on it if you're doing swing trades. If you're doing day trades, in and out kind of stuff, yeah, you can put a trade on intraday, do the same sort of analysis and find your position, but you can't really do it easily on a swing trade. Okay, and finally, let's look at that UUP trade. We got what we wanted there. We took a short position in this, took it on, I believe it was on this particular day right here, and you know, got a little bit of a push against us the next day, but it's closed almost to even. Get the big drop off of Yellen today. I did take profits here at 24.71. We had talked about this thing, and you know, maybe I should have reconsidered yesterday, but I was out and about and was unable to make the adjustments. The potential for it to come down to this bar, that's the 24.20. We're at 24.65 or so now, 24.66. So there's a potential if it gets underneath this bar, this wide price spread bar here, 24.65, right? If it gets under that and stays under it, we can try to make the run to this leg down. What I would rather do now, you know, especially given that I've already taken profits, is to see if it gets a bounce back into this bar. Bottom there is 24.78. Potentially put it back on top of this bar. The thing we have to realize here, and the reason we took profit so quickly, is we actually had a retest regen where it got over it, stayed over it for more than a couple bars. When it does that, that usually says, you know, the trend really isn't this way anymore, which is what we were trading off of, right, on this trade, but is probably more like this. And so, you know, if the market's telling you that the trend probably has changed to where it's bottoming out versus it's continuing on, right, that it's probably doing something more like this now, right, then you need to take your profits, and that's what we did. So we can look at it here again on this bar. We can look at it at the top of that swing point low, potentially put it back on, but I think the risk reward here is diminishing rather than increasing, and it's probably best to put that money somewhere else. So that's the UUP trade, and that's it for today.